and welcome to Sectors Up Close. I'm Elena Casas. Today we're talking cybersecurity, and my guest is David Sekera, Chief US Market Strategist at Morningstar. There was a ransomware attack every 11 seconds in 2021, according to research by Cybersecurity Ventures, and companies paid out $20 billion to hackers just to get access to their own data. The most high profile was perhaps the attack on the Colonial Pipeline a year ago, which knocked out almost half the gasoline supply to the US East Coast for a week. The company paid $5 billion to hackers, and the following month, JBS Foods paid out a record $11 billion in a similar attack. Research suggests total ransom payments will hit $265 billion by 2031. That's bad for business, but perhaps not for the cybersecurity business. But is that demand translating into shareholder value? This is the Pure Funds Cybersecurity ETF tracking the ISE's Cybersecurity Index. It's down over 20% this year as compared to 12% for the S&P 500 as these companies have been caught up in the wider sell-off in tech. Key holdings here include CrowdStrike, Palo Alto, BAE Systems, Cisco Systems, Fortinet and Cloudflare. But are cybersecurity stocks a safe place to stash your cash? Let's ask Morningstar's David Sekera. David, hi. Do you think then that corporate spending on cybersecurity is keeping pace with the scale of the threat? Or are you expecting US companies to further step up their spending in this area?
Hey, Elena. So yeah, we do think that they will continue to keep spending on the threat of cybercrime, as management teams do understand this is not an area to try and cut costs. In fact, cybercrime itself is a very high severity issue, but when you look at the cost to protect against it, that cost is only a small percentage of the cost when you actually are incurring those cybercrime problems. So even though we do estimate the cybersecurity business is about a $150 billion a year business, we do project it'll grow at about a 12% compound annual growth rate over the next 5 years. Now, underlying that assumption is that cybersecurity, it is a rapidly evolving field in which attackers are constantly developing new ways to try and penetrate networks and systems. So I think the managements and companies that they need to understand, they need to remain at the forefront of thwarting those attacks, sometimes even before they start. Now, recent global events are really just highlighting the importance of cybersecurity. In fact, over the past 2 years, with the growth of the work from home environment, that does require additional security measures, certainly heightened geopolitical issues. And then also just that criminal element that you were talking about earlier does remain a problem, as we have seen a number of high-profile corporate ransomware attacks.
As I was saying, these cybersecurity companies have been caught up in the recent tech sell-off. So does that mean they're now undervalued, and why is that?
Yeah, we do think a number of them are undervalued at this point. Now, earlier this year, stocks of many of the more established security companies actually not only held up in the face of the broad market downdraft, but did outperform following the Russian invasion of Ukraine. Now, more recently, we have seen a number of these cybersecurity stocks, such as Palo Alto, Fortinet, and Check Point, they'll get pulled down with the broader technology sector. And to some degree, as the market had been falling towards bear market territory, I do think some portfolio managers were starting to get to the point where they were selling what they could as opposed to necessarily selling what they wanted to. Now, in our view, we do think this has provided investors with a number of good investment opportunities. Generally, we think most of the cybersecurity companies that we cover are pretty high quality businesses. And across those companies that we cover, we do rate most of them with either a wide or a narrow economic moat, meaning that we think they have long-term, durable competitive advantages. And lastly, I just note that this is an area that we think has very attractive dynamics. It's an area growing at double-digit top-line rate for the next 5 years, and it's essentially for a product that management teams can ill afford to cut back upon.
You mentioned the war in Ukraine there. Has there been an effect in the last few months where the fear of politically motivated Russian hacking is driving demand here?
Well, that's what we do understand, is that the amount of hacking out there and the amount of cybersecurity issues certainly has been ticking up over the past few months.
So then, we've seen lots of takeovers recently in this space, haven't we? Are you expecting more? Are these companies a key target for M&A?
Well, this is an area that we do see a lot of M&A, and we expect to continue to see that going forward. There's always a high number of small tuck-in acquisitions as the larger companies look to add new technology and products to their own lineup. However, more recently we have seen a large acquisition. Mandia agreed to be bought out by Google in March, and I wouldn't be surprised to see additional other larger acquisitions over the next couple of months as well.
Just quickly then to finish, what are your key picks in this space?
Well, first I would point out would be CrowdStrike. So CrowdStrike is a 4-star rated stock, does have a narrow economic moat, and it's trading at about a 26% discount to our fair value. So CrowdStrike provides endpoint detection and response, and it's constantly updating its security software via crowdsourcing. It's also the leading incident response and remediation service, and we think that helps them drive new client sales. Second would be Palo Alto Networks, also a 4-star rated stock, which we rate with a wide economic moat. That one trades at about a 13% discount. So what that company does is they provide automation services and cloud security, both of which we think are in the earlier stages of adoption. We also think that company is entering the what we consider to be expand part of a land and expand strategy, and we forecast it will then drive higher margin growth over the next few years. And then lastly would be Fortinet, another 4-star rated stock with a wide economic moat, trading at a 12% discount. And Fortinet is a top network security vendor, which already has a very large installed base, and we think it's the leader in the convergence between security and networking.
Thanks so much for joining us, David Sekera, Chief US Market Strategist at Morningstar. Well, before I go, here are some of the stories we're following in this space. BT and Ericsson have struck a multi-million-dollar partnership deal to offer private 5G networks to businesses in Britain, enabling them to deploy interconnected objects more securely. The applications include remote operation of heavy plant machinery, the use of drones for inspections, and enhanced video analytics. MasterCard has launched a pilot in Brazil of technology that would allow consumers to pay just by using their face, without getting their card or phone out of their pocket. The company says using biometrics instead of passwords and PIN numbers will actually make your money safer. But Human Rights Watch told Reuters the safety concerns are exponentially higher in the event of a data breach. And Russian President Vladimir Putin has complained of Western hackers targeting Russian firms after Ukraine said it would create an IT army to attack major Russian businesses such as banks and government websites. Putin said Russian companies should cut their use of foreign software and technology. Despite the notorious track record of Russia's state-sponsored hackers, fears the country could launch a major cyber attack on the West in retaliation for its support of Ukraine have not yet materialised since the war began 3 months ago, although Italian police say they foiled an attack on the recent Eurovision Song Contest. And that's your roundup of the cybersecurity sector. I'm Elena Casas, and this is Reuters.